Hey folks, Tom Norfleet with www.citizenshipquickly.com. We're going over the 12B part series on renouncing or relinquishing U.S. citizenship. If you got a question or comment, if you'll put it in the comment section below. Also, if you would like to hear any new videos as they come out, hit the subscription button to the right of your screen. Be glad to get those videos out as soon as we issue them. The FBAR, or Foreign Bank Account Report, and FATCA, which is the Foreign Account Tax Compliance Account paperwork, will drive you crazy if you remain a U.S. citizen and you live outside the USA and not relinquish your citizenship. And a lot of banks will not deal with you because of the cost of compliance on their part and liability issues with the IRS. The IRS has sued several big banks stating they've helped their clients tax evade. UBS is one of them, and the IRS is one big because these banks have U.S. branches in the USA. And most of these banks have totally ditched having U.S. clients. Rule of thumb to always follow: whether you have relinquished or not, do not ever put money offshore in a bank that has any U.S. branches, and stay away from buying U.S. equities, because those equities, although bought by an offshore bank, have to be bought through a U.S. broker. FATCA laws have made it impossible for foreign banks to deal in the U.S. dollar unless the FATCA forms are signed by these foreign bank directors. All U.S. citizens are issued W-9 forms by these foreign banks, and these forms go to the IRS so they know what you're making. So if you cheat, you're foolish. You're still a lot better off investing offshore than onshore if you're living in one of these high tax countries in the world, even with the tax authorities knowing what you have. The tax authorities cannot seize your money like they can if the funds were onshore, unless you're making your money illegally. And still then it has to be proven in a court of law. But even then, if you're making money illegally, like stealing money, drug trafficking, rape, murder, prostitution, racketeering, sales of illegal arms, money laundering, and many other crimes because of treaties that the USA has with other countries, have a particular offshore country. Even then, it's difficult to get these funds, especially if they don't have you in custody. I'm not trying to teach you how to become a criminal. If you plan on doing things illegal, please stay away from me, because I don't want your business. But I'm just pointing out how ironclad, your shield is when money is protected offshore and you got a second passport. All U.S. dollars that you wire, whether it be in the UAE or in the Cayman Islands, might be to a bank in these countries, but the offshore bank's money, if in the U.S. dollar, is in a U.S. bank. That is in the USA, and that is, where the funds are actually wired. If you don't believe this, go and look at wire instructions, and you can see exactly, where your money's being wired to. The money is just titled under the offshore bank's name and not your name, but with FATCA, the IRS has your information because the offshore bank has to disclose this with a W-9 form. This is one of the many reasons, if you're a U.S. citizen, you put money in an offshore bank account outside the U.S., doing it outside the U.S. dollar, because by disclosing the funds on your tax form, they can know where it is at all times, but it's outside the U.S. dollar, and now you control it and not the IRS. The only way to stop this reporting by the foreign banks and you having to report the money is by relinquishing your U.S. citizenship and move outside the USA. You'll then be issued W-8 forms when setting up a bank or brokerage account offshore, and nothing goes to the IRS anymore from that foreign bank. But the bank will ask for your copy of relinquishment from the USA, and if you don't furnish it, there'll be a high automatic withholding tax held back from the bank and then sent to the IRS, or the bank will simply just refuse you as a customer. Don't try and fool around on this matter, because if you try to open a foreign bank account with a second passport and not tell the bank you're a U.S. citizen, your second passport will tell the bank about your trickery, because all passports print the country you were born in on the passport, and all foreign banks will acknowledge that if the second passport shows you were born in the USA, then they will know that you were a U.S. citizen at one time. The FATCA requirements also require all these foreign banks to ask you on their bank applications if you're currently a U.S. citizen or have you ever been a U.S. citizen. And if you lie, they can get you for fraud. If you're a U.S. citizen that's sick and tired of paying ridiculous taxes and want to legally avoid paying them, you can do so, but you need to do it correctly or don't do it at all. Why take shortcuts that can burn your ass later when you can do it legally and still get rid of your tax burden? I personally relinquished my U.S. citizenship many years ago before there was a charge in the U.S. consulate or embassy office to do so, and I've never regretted it. There were so many U.S. citizens relinquishing, with the numbers going up every year. The embassy and consulate offices started charging $450 US per person in 2010, and then later going up to $2,350 US per person. Remember, this is not per family, this is per person, just to handle the paperwork. When I got out, it was free. I have no doubt this fee will eventually go up to $10,000 US per person, not too long in the future. The U.S. government does not like losing all this income revenue once you're gone. They want to get as much out of you as they can before you depart with your money. Your first step is to move your money overseas, and then you move overseas yourself to either a pure tax haven country, such as St. Kitts, Antigua, Cayman Islands, Anguilla, British Virgin Islands, or the UAE, which does not have an income tax whether your money is made inside or outside the country. Another option is to move to a country that has a territorial tax system, whereby residents only pay tax on income made inside the country and not outside the country. And countries that have this tax system would be countries like Panama, Singapore, Malaysia, Thailand, Nicaragua, Guatemala, Ecuador, Philippines, Belize, Honduras, Montenegro, Dominica, Costa Rica, and Dominican Republic. Believe it or not, it's a lot easier to get your total taxes to zero if you live in a territorial tax country than if you live in a pure tax haven country, if your income is made outside the country. The reason this is true is if your income is made outside the country that you reside, or outside where your company is located, you don't need to be in a pure tax haven, because you will not have to pay any income or corporate taxes in a territorial tax country anyway, and almost all pure tax havens have to make up the tax loss from not having an income and corporate tax on local earned income. Most of the time, the way that income is made up is on stamp duties, import duties, or VAT, or all three together, charging as high as 50% or more on any item you buy in the store. So your food, appliances, computers, cars, everything else is sky high in these pure tax havens. If you want to see for yourself, go to the Caymans or Bermuda and buy a box of cereal, and then you'll see the income tax. Then you'll actually see the income tax in the price of the cereal based on the import duty and the VAT that's been added to the price. Once you move to one of these countries and you're still a U.S. citizen, you would need to file the IRS Foreign Earned Overseas Exclusion Form, which gives you a deduction in the amount of $105,900 US for 2019. This exclusion usually goes up every year, plus other deductions, but you have to be outside the USA in other foreign countries at least 330 days in any 12-month period to meet the physical presence test to get this deduction. This deduction of $105,900 US only deals with earned income. It has nothing to do with any deduction of estate or inheritance tax. You might incur capital gains tax. You might incur interest income or dividend income you might incur. If you want to get rid of all of these taxes and more, then you would need to relinquish your U.S. citizenship and move all investments in the U.S. from the USA to outside the USA and its overseas territories. Again, if you got a question or comment, place it below and I'll get back with you on any questions you got. Also, if you want to get new videos, if you will hit the subscription button to the right of your screen, I'll get those to you as soon as they come out. Look forward to talking to you on the next video dealing with this matter. Thank you.